Hey traders, good morning. Rick here with Hit and Run Candlesticks. Hey, after this video, if you have the time, check below the video and there is a 50% discount code off on membership. That includes all the membership, the app with the trade alerts real time. That also includes the videos we've been doing about the trades. I call it the trade logic. So whatever trade it is, XYZ, logic video. And it's a minute to a minute and a half, maybe 2 minutes long, talking about the logic on why we're taking the trade. And I've done a few on why we've even closed the trade. So anyway, check below, 50% discount. Hope to see you in the trading room, okay? Thanks a lot. Have a wonderful day. Well, good morning, everybody. How are you? Wednesday, hump day. Here just in a couple hours, we're on the downhill side. Thanks all for being here. Appreciate it. Hey, a great big thanks for everybody that was here last night. I truly appreciate that, hanging out with me. I really do. All right, so what are we going to do here today, huh? Number one, I still think there needs to be a whole lot of caution here. I know there's several people that yesterday afternoon that they were talking to me about, this being a bottom and here we're headed up. Yeah, you know what? I think a little patience on that might be wise. I truly do. Let it prove itself. Yesterday's candle popped up, but it never proved itself. So we need to let that happen. Right now, the sellers control this trend right here. Right there. The sellers control it. Price is underneath the T-line. Price is underneath the trend indicator. Trend indicator is red. There is no bullish activity in here. Even if we were to get all kinds of bullish today like that, this trend is still controlled by the seller. So just careful not to rush in. To the downside, if we do break through these lows right here, I'm going to be looking at that 50 period moving average. There's a couple places along the way in the middle of that it could certainly stop, but I'm pretty much just going to look at that 50. If it stops, it stops. We'll see it with the candlestick. What else do we have? T2123. If you take a look at that on the hourly, it is clearly controlled by the bears. So there's just no way to be long right now based on this. If you follow this, I do. 15-minute chart. We are still in the red here. You can see the red right there. We're still in that red, so it's still totally controlled by the sellers. What we want is for it to look like this. Then we can take a look at some of those buy trades. Of course, waiting for this, I will admit, you will not get some of those early trades. Some of those trades where you just get in, super early, which that's okay. I gave that up a long time ago. I think trading in the trend is much better. Remember Friday, we've got some Fed news, the whole Jackson Hole thing. That could be a super game changer in the market here. So overall, nothing has changed, nothing at all. The weekly chart is still controlled by the sellers. You can see the trend line here. Long as we stay under that trend line, which truthfully, as long as we just stay under the 50 period moving average. On the bigger picture, the sellers have control. You can see the bullish relief rally here, and you can see how the sellers have taken control back now. So the question is are the buyers going to step up and put something together? That's the big question. And we have to wait for that because you can't predict that. We cannot predict that we're going to end up way up here at 450 something. We just can't do it. We can't predict we're going to be down here at 300 either. All we can do is trade the chart in front of us. So trade the bullish trend up when it's bullish. Trade the bearish trend down when it's bearish. That simple. Not hard to do. All right. Hey, good morning, Chip, Thomas, Mike, Rafi, Joe, Bob. How you guys doing over there? John, Scott, Al. How you guys doing? All good, I hope. Again, thank you so much for being here, and a great big thank you for being here last night. Let's take a look at a few charts. I actually have quite a few here, and there's no way we're going to get through them all. It's just not going to happen. Look, there's some longs, there's some shorts. Trade wise, that's the thing. Also, a little, I mean, you know, I saw in the members room yesterday, somebody was helping somebody a little bit, and this one person said something that I thought was pretty wise, and that is, you know, sometimes you have to step back. Sometimes you truly have to step back just a little bit. You know, if you get where you're losing trades and you're just like, doggone it, I just can't make any money, step back. Take a step back. Think about it. You know, reevaluate. Are you trading the trend? Are you trying to trade in chop? Reevaluate. Are you trying to force, I don't know, electric cars maybe? You know, are you trying to trade, you know, the whole electric car thing when they're not doing anything? Pot, are you trying to trade pot because you heard something on the news, but yet the chart is not saying anything? You know, evaluate what you're doing. So step back here. Let's take a look at VLO. VLO, there we go. VLO here, I think this is looking like a really nice trade. On the, you know, just take it from the bottom right here. You've got a trend, very clear trend. Don't worry about price. Price sometimes can scare us to death. I mean, geez, what are we going to do here? And everyone knows I don't like that candle, and I would have said that right here. Nice little hammer, I would have said, well, we've got a hammer here, but I sure don't like that camera. And I don't, or the camera. That candle. I don't like that. But now that it's over that candle, okay, let's go for it. So let's keep an eye on this. I think the buy box needs to be adjusted, so something up like this right here maybe. Looks like there's about 20%, there we go, 22% up to this top up here. So VLO is looking like a good trade. Energy is doing well, even though the market is actually controlled by the sellers at the moment. Energy seems to be doing pretty well. OKE, another one. You know, if we come in here and just put some simple targets in there, one like this, we'll just one up here, and then I'm gonna right about there. So there's a possible 15% trade. Box where you think the entry should be. You know, I've had a lot of input on this from a lot of people, a lot of great input, good conversation. Some people think, well, I draw my box a little too high. They want it back here, and they want this chart to pull back. You know, that is a super A+ idea, I think. I think it's a bad idea for me, but I think it's a good idea. Not every trader, we shouldn't all be the same. We don't all wear the same size breeches. We all wear different size breeches. So your breeches might not fit my butt, and my breeches might not fit your butt. So let's make sure we wear the right breeches here. And if you want your entry down here, that's great, fantastic. Do that. If you want your entry up here, okay. If you want your entry above all those candles on a breakout, that's okay. They're your breeches. Wear them. There we are. So the trade is all about how you set it up. All about how you set it up. SCCO might be setting up here. Beautiful bottom. I'm currently in FCX. I think a lot of people are in that one. But this SCCO is also. We've got a nice bottom here. I don't think we have to rush into it. I really don't. I think if we just consider where the bottom is being made, so maybe right in here, and you could even go up here if you wanted. I think I'm going to go right here. So the high of this candle, and then let's do this right here, the low of this candle. This is the bottom construction right here. This is the foundation. So once we break out, this has a lot of room to go. So, we could set this up like that. There you go. Something like that. Now, and I get it if somebody wants to buy down low down here. I'm not trying to say you can't do that. You can certainly do that. Everyone trades their own trade. But one thing you might want to consider, and I don't have a problem down here, but if you buy it down here, remember you've got all this. And here's what tends to happen. People that try to buy too low, they tend to get out too quick. Where if you take your time, you plan that trade, you walk into it at a more, I'll say, respectable level. That's what I'm going to call that. Then you tend to hang with the trade and work it a little longer. Because if you're rushing around, you're rushing around. You're rushing to get in, then you're rushing to get out. You're rushing for that new shiny thing. So, just consider that right there. Anyway, love the chart. Love the bottom here, the way it's acting. CVX. I had a couple shorts on here. We better go find them. CVX, I like that. This one here, we had a trade plan already on it, and it's already pulled up. So you can just adjust that trade plan. Probably should get up here too. There we go. So adjust that trade plan a little bit for you. Where would you not like the chart? I'm actually going to have to bring that down a little bit. There we go. There it is. There we go. So I probably wouldn't like it below 159.50. Anywhere in here is a buy, and the targets, there we go, to the upside. MOS, this is another long trade. Maybe you want to adjust the buy box. Here it's broken out. Looks like we're trying to put in a little inside day. Nice trade. I'm going to go try to find some kind of a short here. I know I saw one. Oh, that's not it. There's a nice chart. Uh-oh. MS. There we go. Here's a short that I'm looking at. This is a rounded bottom breakout. Members, we talked about this a few weeks ago on how the rounded bottom breakout is a bullish setup. That's a bullish setup. Within that bullish setup, it is perfectly normal to trade a bearish trade. So here we've rallied to the 200. We did just what the rounded bottom breakout was supposed to do. Now we're failing, we're pulling back. We can look for that pullback right here. Let me kill this. Here's one idea. Maybe we come down to the 50-period moving average. I'm going to come right here. And then I'm going to come up to the 200 and just throw some fib lines on it. And then just take a look at that 50% mark right there. Okay? Now let me get rid of this. So we've rallied. The whole trade, the rounded bottom breakout is based on the 50-period moving average and the 200-period moving average being oversold to each other. And it is a relief rally in a bearish downtrend. Anytime you've got the 50 below the 200, you have a bearish downtrend. So this is just taking a relief rally to the 200. Well, if it gets there and starts to roll over, then a very logical area for it to come down to is about 50%. There's your 50% mark. This happens to be right at the dotted deuce. It doesn't work out that way 100% of the time. But there's your 50% line right there. So this is very tradable now to, there we go, which that's not big money. That might not be for you. But nothing says that it has to stop there, because at this point we're going to start working with price down in there. So as long as price wants to continue to the downside, go price, go. So there's a nice trade. You know, that's actually all I have time for anyway, okay? So, thanks everybody. We'll see you all back here in about 25 minutes. Everyone have a great day. Thank you very, very much. Take care.